And this is the story of the greatest day trader that you've never heard of. His name is Takeshi Kotegawa, otherwise known as BNF, and he managed to turn just $13,600 into $180 million, and he did it in the span of just a few years. But here's the crazy thing. Aside from buying some real estate, he still eats the same ramen as when he was broke. He doesn't have a car, he doesn't have a jet, he doesn't have any of these fancy clothes. And so when I figured this out, I had two questions about BNF when I first started learning about him. Number one was, how did he get so rich, turning 13,000 into 180 million in just a few years? And also, why is he not flexing? What's up with that? And it turns out that the two questions are not as separate as I once thought. The answer to both is pretty similar, so we'll get into that. One important thing to note is that Takeshi was completely unknown for most of his life. Aside from a few nerds on some trading forums, no one knew about him, and in the span of a single day, he became famous across all of Japan with a trade that made millions in the span of hours. But we'll get into that later. First, we have to go back to 1989, where our story starts. And at this time, Takeshi is 10 years old, and he's worth $0, but he has something far more important than money, which was knowledge. The Japanese network NHK World aired a 4-part series on the world of finance in 1989, and Kotegawa at 10 years old was obsessed with the series. The first episode was on this guy named Victor Niederhofer, and he's a bit of a legend. Let me tell you about him. He lost $50 million, and he blew up his fund not once, but twice. Despite that, young BNF was hooked. He loved the show, and he was completely inspired by Victor Niederhofer. He even named his trading name off of Victor Niederhofer. And you can see here his inspiration from Victor. He was already a successful man, but he decided to go all out and take a big gamble. Victor lost everything in the end, but his courage to bet on his beliefs was amazing. In BNF's words, I can't imitate that. So he has this inspiration, and even though he has no money, he knows what he wants to be. He wants to be like Victor Niederhofer. He wants to take big bets, swing for the fences, and risk it all when he grows up. In a few years at his peak, BNF would manage to make $15 million in a single day. But for now, he was still starting out. And that brings us to 2001. When BNF is 21 years old and he's managed to save up $16,000. In his words, he lived as a parasite at his parents' house. So he has some pressure to, get a real job, get a real education, stop focusing on all this stock market nonsense. There was just one problem. The stock market rose 400% throughout the 80s and then proceeded to enter a multi-decade long bear market. We can see here in 2001 where he started, the market is down significantly from its peak, and it would continue to have a bear market structure while BNF started out. In fact, the 90s, the decade after the boom, came to be known in Japan as the lost decade, where companies were going bankrupt, where companies were failing, people were being laid off, and the once rising superpower was completely checked. So this may seem like a very bad thing for BNF. The market's going down, he's in a bear market, what are we going to do? However, there is a saying in finance that bulls make money, that bears make money, and pigs get slaughtered. And it's the bears make money that BNF would really focus in on. He had a plan for how he would become a successful trader like his idols. And this is what BNF would do in this time. He would look at stocks that were deviating at least 20% from the 25-day moving average, with 35% being a somewhat safe level to buy. So what the hell does that mean in English? Well, I have a small example here. We can look at the stock price of SoftBank, and you can see this is the ticker as the days pass, and the blue line is the 25-day moving average, the average price of the stock. And you can see right here, there's a deviation between the moving average price and what the tickers were showing. And so what BNF would do is he would take a look at that deviation, and if the deviation was higher than 20%, he would consider buying and then selling in the same day as the stock recovered to meet it. Now, this is not a great example because it's not a 20% difference, but whatever, you get the idea. If the stock he thought was being oversold based on these signals, he would buy it and try and sell it within the same day or the next day. But the reason this is important is because BNF knew you had to be a contrarian to make money in finance. You can't be doing what everyone else is doing. So you had to look for spots where it looks like the stock is oversold and then bet against the market. There was just one problem with his strategy. He was losing money. It wasn't working in the beginning. And in his words, contrarianism is very difficult. I don't really recommend it. In fact, it was going so badly for BNF that there was many times where he wanted to give up. He wanted to quit. However, there was just one problem with that plan. As he says here in this quote, if you lose 20,000 yen, you can make it back through a part-time job. But if you lose 200 million yen, you can only make it back through stocks. So he had to stay in the markets. It was the only way he could make his money back. And I mean, it kind of reminded me of this meme. Sure, his logic kind of works here, but you have to pivot away from a losing strategy for this to make sense. And that's exactly what he did. He decided to study his losses instead of giving up. And what he found was something interesting. Different sectors had different volatilities. What do I mean by that? Well, the IT sector might have stocks deviate 20 to 40% from their 25-day moving average, whereas the services sector might have stocks deviate 10 to 15% from the moving average of the price, whereas the manufacturing sector might have stocks deviate 40 to 50%. I'm just making all these numbers up to prove the point that his strategy was only working in certain sectors. And in different ones where the volatility was different, he had to adjust his plan, and so he did. And he finally began to make money. He found the problem, which brings us to December of 2001, the end of his first year of trading. He's having some small success, but he hasn't really had a breakout moment yet. He's still living with his parents. He's still struggling. And in December 2001, I wasn't born yet, but maybe for those of you that were, you were celebrating Christmas, you were thinking about the gifts that you were going to buy. You probably weren't thinking about the Japanese stock market. But if you were, you knew something big was going down. There was complete chaos in the start of December 2001 for Japan. Penny stocks were plummeting. They were crashing everywhere. Bankruptcies were running at a rate not seen in over a decade. And Mizuho Holdings, the largest bank in the world by assets, had fallen by 9% in 1 month. It was mayhem on the Japanese stock market. But as Sun Tzu says, in the midst of chaos, there is also opportunity. And BNF and his friends were all buying. They saw the stocks were red. They saw everything was crashing, and they were jumping in with both feet first. But BNF went one step further. Instead of just buying stocks that were plummeting and hoping that they were going to return to the previous month's levels, he looked for stocks that were seriously oversold, that had taken a serious hit, and he began to buy up stocks that were down 50, 60, 70%. And well, BNF was right. A lot of his friends didn't even make their money back just buying the oversold stocks. But because he had looked for stocks that were seriously oversold, he reaped the rewards, and he reaped them big. He was up 100%, 150%, sometimes 200% in days on everything that he bought. And that brings us to December of 2002. 1 year later, we're now a few years into BNF playing the markets. He has reached age 23 and he is worth almost $1 million. He is killing it. He's worth almost $1 million at age 23. Well done. Just started trading. In fact, he has decided to pursue it full time. He says, I'll go until I'm 25, and if that doesn't work, then I'll try and get a job. He drops out of college. He's almost done his last year, but he's so focused on stocks, he can't even manage to get the last few credits. So he drops out of college, he goes full time in the stock market. And despite all of that, his father told him, you're gonna lose money anyway, so you better quit quickly. Being almost a millionaire wasn't enough for his parents to believe in him. They still thought he should get a real job, finish his college, and be an upstanding member of society. But BNF's doing well, right? What could go wrong? Well, something goes terribly, terribly wrong. Disaster strikes. The Japanese stock market enters a bull market, and everything starts going up in price. Now you might be thinking, oh, Elias, what's the problem with that? If the prices are going up, that's good, right? What's going on? No, you see, you are an idiot. BNF's strategy only works in a bear market. His whole strategy was based around buying oversold stocks and then reselling within the next day. And none of his indicators, none of his plans, none of his tactics worked when the stock market was rising like it was now. So he had to develop a new plan. In his own words, the market situation changes every day. We have to adapt to it. Don't go against the flow of the market. BNF wasn't going to try and make his strategy fit to the market. He had to adjust his strategy based on what the market was doing. And he began to notice a pattern looking at the stock market every single day. He noticed that The leading companies like Toyota, Sony, SoftBank were obviously making higher highs and higher lows over time, but they wouldn't move all at once. Maybe one day Toyota would have a big rise and SoftBank would have a big rise, but Sony wouldn't follow it. And then a week later, Sony would follow and catch up with them. And so he began to realize that if you just look at the leaders, the big large cap companies on the Japanese stock market, and buy the laggers that are falling behind, they would often catch up and he would make his money back within a week or so. And this strategy worked for BNF. He was making profitable trades. He was growing his account. He wasn't really a day trader anymore because these trades would only show up a few times a month, but that's okay. He had a new strategy and it was working with the market. BNF was doing well. He was making money, but his next trade is what would make him famous across the entire country in one day, because he would risk almost everything, just like his idol, Victor Niederhofer. But before we talk about that, we need to talk about another incredible trade that someone made. Someone in my comment section, in fact. Take a look at this. At MFer invested $1,000 when I was at 95 subscribers. I'm at 1,600 right now. He's up over 10x. MFer, great trade. And listen, you can get on it too. If you subscribe right now, we're at 1,600 subscribers right now. I'll be at 10,000 very soon. You can 10x your subscription value as well. Okay, so invest in the channel. Anyway, so plug aside. That brings us to 2005, when BNF would make his most infamous trade yet. He's 26 years old and he has $10 million in his account. And on December 8th at 9 a.m., the company JCOM Group was going public in Japan. Now, this was like any other IPO, except for one issue. The stock was plummeting. In fact, the graph shouldn't even look like this. It should look like this based on how fast JCOM Group was going down. And everyone was freaking out. Was this fraud? Was JCOM Group the Japanese Enron? Was the company secretly bankrupt? What was going on? Why was the stock plummeting so much? But while everyone else was freaking out, BNF saw opportunity once again. In his words, in the end, price movement is the most important factor. News is often about catching up. That's why I don't read many magazines or financial statements. He just looks at the price movement, and that's what he did this time. He put in a buy order for 7,000 shares of JCOM Group, totaling 3.4 billion yen, or 50% of his entire portfolio. This was make or break. He would end up like Victor Niederhofer, or he would make millions. Now, why was JCOM Group plummeting? Well, do you remember these guys? Mizuho Group. We talked about them earlier when they were falling in December 2001. Well, it turns out that one of their traders had made a mistake. He was told to sell one share of JCOM at 610,000 yen, and instead he sold 610,000 shares at 1 yen each, which of course caused the price to plummet. Mizuho was desperately trying to buy back their shares after they realized the mistake, but other large institutions started to find out as well. And so after BNF had put in his buy order, Mizuho tried to buy them back. Other large institutions heard about the chaos that was happening, and they tried to put in buy orders for JCOM. And JCOM went from going incredibly down in price to rising massively over the course of the day. And by the end of the trading day, JCOM was up huge amounts. All of BNF's friends that had gotten in with him were selling their JCOM holdings. Everyone sold their shares, except BNF. He held 90% of his shares overnight. And by the next morning, everyone knew what had happened. The Washington Post, the typo heard around Tokyo, December 8th, 2005. New York Times, Japan rebukes exchange for costly trading error. The Guardian, too fat, too fast, the 1.6 billion pound finger. Everyone was talking about the mistake, and everyone expected the government to step in and force everyone to give their shares back to JCOM. It was just BNF versus Mizuho now, and as the hours ticked on, the government did not respond. BNF had won. He was allowed to keep his shares, and Mizuho would have to buy them back from him. They agreed on a settlement. BNF would sell all his shares back to Mizuho at a certain price, and when the dust settled, he had made $15 million in a single day. This would cause BNF to be known as the JCOM man across all of Japan, and he was a legend on trading forums everywhere. But again, aside from buying real estate, he still eats the same ramen as before. Why? He had made so much money. He had taken on incredible risk. Why is he not flexing? Well, in his words, if you care about money, you cannot successfully day trade. To me, losing 100 grand can feel better than making 6,000 if the losing trade was a good one and the winning trade was a bad trade. You see, Takeshi Kotegawa, BNF, doesn't care about the money. He cares about winning. He cares about the game. Trading was never about the money he could spend. It was always about mastering the art. And that brings us to 2006, the end of our story today. After starting 5 years earlier with just 14 grand, he would end with $143 million.